Now, again, my signals remain bullish. We are forming negative divergences in the weekly time frame, in the monthly time frame, watching to see if that changes my signals. My signals currently remain bullish. I warned you over here that something was getting ready to happen. I warned you signals had all begun to turn bullish. I talked about my different indicators turning bullish one by one. We bounced over here just above the 100-day moving average. Over here, the 50. The 50 is not seen on this chart. The candlesticks represent the trend. We began to see warning signs over here. They turned orange, warning of a turn. We got actual sell signals for the trend and for momentum. Sold off down over here, and we got a warning sign of a possible bottom. It's like we got a warning sign of a possible top. Actually marked the very day of that top. Here it came just after the bottom, a couple days after the bottom. We got buy signals forming and momentum shifting here. We went up, turned it down off the upper boundary of the cloud, turned back down, again remaining below this line right here representing the trend, came back down, got a higher low. We got back-to-back bullish candlesticks. Momentum with that pullback began to turn bullish. You see that blue line right there began to turn bullish. With the back-to-back candlesticks, momentum tried to turn bearish here with the red arrow, but then flipped right back to bullish, and we confirmed the candlesticks, and momentum shifted. It turned the swing trend signals back to bullish, and we actually got a green bar pushing back above that line, reflecting the trend. You see the little bullish buy signal there? When we drop below it, we get the bearish signal. Got to be able to stay above that line, bullish environment. Bars turned green, momentum turned up, the trend turned up. The background went from red to green. The trend is changing, validating what we were seeing, and the balance of power turned positive. Up here we got a bearish engulfing. You can't see that because the bars are reflecting the trend, but eventually we began to see a little bit of a pullback. Couldn't take out the 50-period moving average, and we couldn't take out the lower boundary of the cloud here. The trend remained bullish. Bar turned back to orange after turning red, showing more of a sideways move that the pullback could be done. The next bar was a green bar, and again, gray shaded area was telling us something was getting ready to happen, and I talked about that before we had this push higher. We talked about that, and then also, again, we were expecting that CPI rally, which was back over here. Right now, again, the blue line is momentum. It's bullish. The trend is bullish. We're above the purple line. The trend is still bullish, but we're pushing into major resistance. So we're watching to see, is momentum going to shift? And if it does, will that shift and change the trend? My guess is we're likely going to see that happen. There are no sell signals up here yet. We'll be watching to see if any develop. Some interesting sell signals develop over here right after the Fed day here, and then at the actual top there on April Fool's Day, we got this other circle warning of a possible top. We don't have that right now, so again, watching to see if we close strong or if we close weak by the end of the week with options expiration this week. But right now, signals remain bullish. We have these major negative divergences developing in the weekly and the monthly time frame. I just want to show you this chart right here. This chart represents momentum. Okay, the bars reflect momentum. They turned earlier here with the buy signals. They began to turn. And then again, the momentum line here on this chart, it began to turn early on. And again, it usually gives you a warning before anything else. The momentum line turning to red. It did over here. It turned blue over here, turned red here, back to blue here. So it does a really good job. What I'll be watching as we go into the rest of the week and on into next week, does the momentum line turn red? Do we get some kind of reversal with the candlesticks and they start turning red? So those are going to be the first two to turn in all likelihood. And we may get one of these warning signs, warning of a top right here with the little T above the price. Here we got a bearish engulfing candlestick, and we got that warning sign. Over here, we had the peak, and the very next day after the April Fool's Day high, we gapped lower, and we got a warning sign right there. And then we got other warning signs that followed. But we'll see if any kind of warning signs show up here. So far, there are none. I'm paying very close attention to the momentum line and the momentum candlesticks. Do they start turning red at some point this week? shortly thereafter. We did see perfected 9-count sell signal yesterday. Again, I told you over the weekend, I thought we were going to push above this bar 7 and get a perfected sell signal on the S&P, NASDAQ. Completed 9-count. If that would be the case, it did. And on Monday, we got a perfected sell signal here and a 9-count sell signal on NASDAQ, a perfected sell signal. Now, again, 9-count, it tells you you're going to either get an immediate trend extension, you're going to get a pullback and a trend extension, or you're going to get a reversal. One of those three. Now, again, sometimes you get the 9-count and you go a little higher, and then you turn and either get the pullback or the reversal. Like the case here, because we needed to perfect that sell signal. Now perfected. So again, I'll be watching to see if we begin to turn. Again, I'll be watching for the next close below the upper Bollinger Band. Watching later in the week on Thursday and Friday, do we see some kind of reversal bar immediately or go higher, get a topping tail or something like that? I'll have a 9-9 sell signal, a 9 here that gave us this sell-off. Again, we went a little bit higher and then we turned. Now we have a perfected 9-count here. There's no P above it because it was not perfected with bar 8 or 9. It was perfected afterwards, but it is now a perfected sell signal. NASDAQ got a 9-count sell signal on Monday. Again, we got a doji today, candle of indecision. We're still, it looks like we're just closing slightly above that band there. Let me bring it up real close so you can see it. Again, I'll be watching for a close back below it. Here's a candle of indecision. Do we go a little higher? Do we start to turn? We now have a 9-9 sell signal, which is a reversal pattern, by the way, for the sequence counts. And I'll be watching to see if it ends up marking a reversal. So we'll be watching. Do we start a turn immediately or do we go a little bit higher? We'll be talking about the intraday charts later in the video. Tuesday, we had the VIX down by 3.5%. The VIX is at 12.30, dropping back below the 10 and 20 period moving average. Again, so far it's not moved to a new low. Watching to see if it will or not. The S&P moved to new high. The VIX has a discrepancy. It is not moving to a new low. And again, in order for volatility to return, the VIX has to come up here and get back above the 50 and the 200 period moving average in order for volatility to return on the S&P 500. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, if you like the indicators, let me know that by supporting the channel. If you could take a moment and partner with me, I would really, really appreciate it. I don't have any sponsors. I turn all those offers down because I don't want to sell you a bunch of stuff you don't need. Send you to websites. I want to sell you a bunch of stuff you don't need. Just ask that you just partner with me and do what you can to help out. If you could do that, I would really, really appreciate it. Thank you for your consideration for that. The market will be closed on Wednesday, but then reopen on Thursday and Friday. Watch the video all the way through. I'll be talking later in the video about these channels and about the 60-minute charts and intraday charts. I might possibly post a video on Wednesday, a short video on Wednesday about something, but not sure 100% if I'm going to do that yet, so do check back and see. If I do, it would be afternoon or early evening. Now, after going sideways, again, I told you I still expected the S&P to go higher, but we can pull back a little bit. We pull back, and we pull back to the 50-period moving average and just started drifting sideways on the S&P for the Tuesday session. Up with the close. 14 points higher, about 0.25%, just kind of going sideways. I told you on the 15-minute chart in yesterday's video, again, I thought we would go up and form a divergence. We actually did, but I don't think it's done yet. It's the 5-minute here. If we were going to get a bigger sell-off, we'd have to take out this 200-period moving average here. We're bouncing off the 50 and then kind of going sideways, dropping below it, getting back above it, and just kind of going sideways. This is options expiration week. So again, I do think go a little higher, but then I think reverse by Friday's close. You even see some kind of little topping tail or a big topping tail on the weekly chart on the S&P 500. The 15-minute chart, we did move slightly higher, so there is a divergence. My guess is it's probably not done yet. I talked about these bull flags over here and the triangle ahead of the Fed meeting, ahead of the inflation data. Thought we'd get a bigger rally towards the upper resistance level, that channel line in the weekly time frame, or even overthrow it. We've overthrown it, redefining itself. Then we had the bull flag here right before the Fed and the CPI. I told you I thought we'd go higher. We saw it break out just ahead of the Fed there, and the CPI rally. Rallied with the CPI, we formed another one. We pulled back with the Fed. We formed another bull flag. So there's a series of bull flags here with the pennant triangle continuation. And again, we had this little divergence develop. It gave us a kind of a pullback and then sideways kind of move. Now we're moving higher. I don't think this is done yet, but I think it will be, again, probably at some point early on Thursday, throughout the session on Thursday. The market will be closed on Wednesday. We have 2 more trading days left for the week, but then I think this divergence is going to play out, and we're going to start to see, in all likelihood, some type of volatility surrounding options expiration on Friday. Again, the option expiration week tends to have a lot of volatility. You tend to see a swing higher and a swing lower, vice versa, a swing lower and a swing higher. Not always, but more often than not, you tend to get the volatility surrounding options expiration week. I still think we're likely going to go higher, but I think you could get a possible topping tail on the weekly chart before all is said and done. At the trend line that we connected this peak here with this peak here, we've overthrown that level last week. We overthrew that level, and again, this trend line right here is parallel to the lower boundary, excluding shadow there here. But again, we're overthrowing this level right now. We could see a topping tail. You know, when Bitcoin peaked over here, and both Bitcoin and the S&P, they formed these channels. They both peaked. The S&P peaked the day after the Fed, and it peaked the very next week with a post-Fed sell-off, April Fool's Day, on April 1st. The rally was a fake out on April Fool's Day. A little double top pattern. You see a topping tail because when Bitcoin hit the upper boundary of the channel, it did form a topping tail, and we saw that downturn. Is what I want to point out to you right here is, again, this is the NAAIM Exposure Index. This is active money managers. They're all in. Again, we had the divergence over here between the March peak with right here and the top that gave us this sell-off right here back to the 20-week moving average. We turned back up. We got another high in May, but we didn't quite reach the upper boundary, our previous trend line there that I talked about. We didn't reach it. We were shy of it. And again, I told you I still thought we'd reach it. Well, we turned back down, and again, we tested the 10-week moving average here, but the signals didn't flip to bearish, but we just had a pullback, and again, we saw the exposure index turn back down. Now it's turned back up, and it's forming a divergence here in the most recent price action from the May high, and a larger multiple point divergence from this previous peak. So you've got this multiple point divergence. I've talked about divergence over here and how it's marked the 2022 top, and they were all in. But it's forming this massive divergence with the S&P 500 right along with what we're getting like down here on the MACD and up on the RSI that I've been talking about. Again, so I think you could see a topping tail this week or some kind of reversal before the week ends, options expiration. But this is a huge warning sign as we're pushing up into that long-term, a monthly resistance on the S&P 500 that I've talked about. Again, look at the MACD. It looks just like it did back over at this top, forming a divergence here. We're doing the same thing right now. You had a bullish divergence down here at the bottom. Do you see the divergences on the MACD? So this is likely going to produce a reversal, and we had the same thing on the RSI. We had the peak over here with the RSI, just like on that MACD. We had the bullish divergence down here at the bottom, and then we have this divergence right here, right now. So again, I'll be watching to see we start a reversal before the weekends. Again, these are all the Fed meetings. Again, I'm just showing you this chart. I've been tracking the Fed meetings, and I've noticed that every single Fed meeting is calling a top or a bottom or an extension. I've talked to you about this, and again, the last 2 meetings, this was a bottom. We had those back-to-back bullish candlesticks. One of them was the Fed day, the inverted hammer. Over here, again, it was the top. with the March high, and my arrow moved on me, but it's the peak right there. We peaked the day after the Fed meeting with the NASDAQ and Dow. The S&P peaked the following week. What is this? The following week. Talking about a post. Now going back to the intraday charts, if we form this divergence, and it's not done yet, if we end up forming it further, we do have a divergence, but if it forms further, again, we could go a little bit higher, begin to sell off. If we do begin to sell off, could form a topping tail. If the divergence is done and we start to sell off immediately, well, be watching to see what happens on Thursday and Friday. It could be that the rally fizzles out in the weekly time frame before the end of the week. That is certainly possible. We're up over 1% right now, 1.02%. Could go higher and then begin reversal with intraday divergences. If that happens, you got a shot at forming a possible topping tail. I guarantee it plays out that way, but I'm just telling you, if you get a sell-off at the end of the week, it very well could. It played out that way over here at this top. Again, we rallied, topping tail, and then we rallied the following week, and we went a little bit higher, and we got another little topping tail, and then it was followed by a bigger wide range bar, which was red, further selling. Tried to rally, and the rally failed is what happened. See something like that here. Candle that might look like something like this gravestone doji, or this shooting star right here, something like that, or the opposite of the bottoming tail we had over here. So again, or the bottoming tails here and here. I'll be watching to see, do we get some kind of topping tail before the week ends. 15-minute chart. I'll be watching this 15-minute chart, but I'll also be watching the 60-minute chart. Now, while the 15-minute chart completed a small little divergence today, we also have a little one here on the RSI in the 60-minute time frame, a little tiny divergence. We did go slightly higher. So what I'll be watching is, do we still get a bigger pullback and then still try to go higher, or do we go a little higher and then try to sell off maybe Friday? We'll be watching to see this unfolds. It can unfold a couple different ways. Again, you can see the divergences in the weekly time frame are developing. However this concludes, it is likely those divergences are going to produce a reversal on the S&P, on the NASDAQ. Got the divergence here on the MACD. It hasn't rolled over yet, and we still may push higher and then try, and again, could form a rising wedge here, could continue to have a channel, which we have a parallel channel at the moment in this current move higher. I've drawn a couple different channel lines in here, and again, the blue one here includes these lows over here, and again, from this peak right here, we overthrew that level now. Take it from the high over here, it would be this black line over here. If we connect this low and this low, you have a potential channel, and if the red trend line here parallel to this lower red trend line could be again pointing up in this area. So if we do push higher, just some trend lines I'm watching. Remember, the signals remain bullish, forming those negative divergences, so I'm going to be watching for a shift in momentum. It might come before the week ends or close strong with options right after that, after the weekly close. If we close strong or if we close weak. Do we get a topping tail? Do we close strong? And just one thing to keep in mind is that we are up here at this long-term resistance level. If we go higher than this trend line, you've got another trend line from the 1929 peak. We may not make it. Didn't hit the trend line at the 2007 top, although we did in 2000. Just connecting the 2000 top here and connecting this peak right here. Again, we're just slightly under this level here in the monthly time frame. And you've got a divergence here in the most recent price action here between that April 1st high and currently our peak right now. And that's forming this little divergence. Every single divergence has led to a sharp reversal or a bear market. The lowest amount of the decline in all of the sell-offs was 17%. Every single one was 17% or more. It is usually multiple point divergences that produce a reversal rather than just a correction, and that's what you have going over here. We did have a multiple point divergence set up going into the late 90s on into 2000 there that gave us this peak. This one has given us several major corrections in the longer term bull market. If we do end up reversing, we could be headed back towards this parallel boundary of the upper boundary here, this parallel boundary here, the lower boundary in the monthly time frame. The bull market will end if we take out the 50-month moving average. Let me just bring that up so you can see it right here. I flip this back to red. I had the 10-month moving average blue for some reason. Again, we bounced off of it here. Here we violated it and then got right back above it. Got a bottoming tail after the pandemic sell-off here. We bounced off of it. Here we were just above it. Here we violated it in 2011, but then got back above it. Again, in order to end the bull market, you got to drop below that 50-week moving average, 50-month moving average. This multiple point divergence is likely going to do that, but each one played out. Each one gave you a very, very sharp decline. And again, the last one that we had was at the January 2022 top. And again, the multiple point divergence, and hit that level. I talked at that time about this trend line right here of this channel right here. And that peak has now connected to this peak over here from the 2000 top, which is where we're at right now. So this trend line could terminate the advance for S&P 500. It could to reversal and usher in a bear market. We know the Fed is going to pivot, so we know we're going to have a bear market. We know a recession is coming, so we know we're going to have a bear market. But right now, my signals remain bullish. I'll be looking to see if they begin to flip, we start a post-Fed sell-off, but wanted to show you these divergences on the monthly time frame. By the way, the 50-week moving average, we had dropped below the 10-week over here in these bear markets. You lost it, or 10-month, I'm sorry, but it was validated once we lost that 50-month moving average. You got a bigger dump, but by the time you reached it, it already had a significant drop, and same thing over here in 2007. By the time we reached it, that's when the 2008 sell-off was really starting to get underway. Already peaked in 2007. Again, we could see something like that here. But again, the trend line here, the 50-week moving average, when these levels start breaking, it's going to terminate the bull market and usher in, or really confirm, I should say, a bear market. Previously, back to the 60-minute charts. I told you previously, again, I thought we'd go higher over the weekend. I told you we had a count that was going to finish on NASDAQ on Monday, and I thought the S&P would go higher and get a perfected sell signal. That did happen on a Monday. So again, are we going to just turn with that? Going to go a little bit higher. We'll see how it unfolds. Are we just getting a slight overthrow here and we turn a little higher? My guess is we'll probably go a little higher, but it could play out either way if we start rolling over and start dumping on Thursday and Friday. We'll be watching. Do go higher. Say we gap higher or go higher on Thursday and start a reversal on Thursday. It could continue on the rest of that session if we get maybe like a gap and trap intraday charts and on into Friday. We'll see how it can unfold a couple different ways. Here's the RSI, here's the MACD. Let's look at the momentum. Now here's that channel that I showed you on the other 60-minute chart. Again, connecting this low here and this low here. And if you just draw a parallel boundary with that, then it takes you a little bit higher. And again, you can end up forming a rising wedge or something like that going into this level if we do go higher. So we'll be watching that. We've tried to pull back a little bit, but we ended up going sideways. We found support on the S&P at the momentum line, and ended up higher. Tried to roll over here, but then ended up turning back up. So again, we could still turn it back up here and go to a higher extreme before rolling over. So we could still see something like this happen, like that, and then come back down. But if we do complete the left side of a head formation, again, we could be headed back towards the lows over here at 4,900 going into the next Fed meeting. So do keep that in mind. Just some different channels, though, that I'm looking at. This one, I think, has some real possibility here just from these two lows over here. One other thing I continue to point out is we have a possible rising wedge if rather than connecting these lows or connecting these lows, if you exclude the shadow right here, you do have a really nice looking rising wedge pattern here in the daily time frame if we exclude those shadows. So again, that was our test back to our 50 period moving average. Again, we'll see what happens. And again, this trend line, upper trend line may change a little bit. I'm just connecting these two points right here, but a narrow range body today after a wide range bar. We'll see if, again, can the momentum continue or start turning. Another thing I'm paying attention to, while we have the divergences in the monthly and the weekly time frame, many divergences are on the chart. We don't have it on the RSI. Now, again, to have a divergence, in the weekly time frame, didn't have a divergence at July top. We did in the daily time frame, but not in the weekly time frame. Over here, at this bottom, we did not have a divergence. You don't have to have a divergence, but you can. You just move to an extreme and you confirm a lower high. But something we're paying attention to, we could still end up selling off and getting something like that. Over here, we formed a divergence. We had a peak here the day after the Fed. NASDAQ and the Dow peaked that day. The following week, we went back up and we went higher by 3 points, and you formed a divergence and sold off and got the post-Fed sell-off. Again, just watching those divergences in the weekly time frame, I think they got a really good shot of playing out. So we'll see what happens. And again, this head and shoulders has a pretty good shot at playing out if we get a sell-off with this surrounding this Fed meeting into the July 31st meeting. That's right over here. That could, again, form this head formation. If a divergence forms, maybe we sell off and then we go back up slightly and then we get it and get something that looks like that. So who knows? The signals right now remain bullish. If they start to flip, if momentum starts to flip in the trend signals, we'll be watching to see if they remain that way, or do you get a divergence developing here on the RSI? Just something to be aware of. Again, we don't have to form a divergence, but we certainly can. You already have divergences on other indicators. We are getting this larger divergence on pring parameter with this April 1st high and our recent highs here. You're forming a very large divergence, a negative divergence here on pring parameter. It's not moving to new highs. The S&P is very similar to the divergences that are developing in the weekly time frame on the MACD, the RSI, some oscillator. Right here with momentum, we do have a divergence that is developing. It may not be done yet. It is kind of trying to turn back up without crossing over, without rolling over. Again, we continue to hold above the upper Bollinger Band. I told you again back over here that something big was about to happen. We had warning signs, the Bollinger Band tightening, and again, we saw that happen. Saw it happen back over here. I told you something big was going to happen here. Well, because we saw them begin to first tighten right there. So again, both cases, it led to a push higher, which is what I told you I was expecting for the upper channel line to be reached in the weekly time frame. My signals also remain bullish. Here I have the channel drawn in as I was showing you on the 60-minute chart. And again, I'll be watching. Do we close immediately below this upper Bollinger Band and that's it? Did form a small divergence on the 15-minute chart, on the 60-minute chart. Is it not yet done and we try to go higher, but then we get some kind of reversal, and again, maybe to a parallel boundary to this lower boundary right here, as I've talked about. Closed above the upper Bollinger Band over here, but that just took us sideways. We got reversal candlesticks, but they weren't confirmed. Candlesticks have to be confirmed, and I told you, again, we are likely going to validate the 9-count sell signal, the perfected sell signal, which we did do yesterday, and go a little bit higher, and then begin to turn. When we close back below the band, well, we closed back below it over here, and it ended up leading to this. I think we'll get a bigger sell-off that will eventually take us back to this 4,900 area towards the 200 period moving average. By the time we reach it, I think it will be up here probably into July, at this level or above this level, that we'll be reaching it, moving back towards it. We bounce with the next Fed meeting in late July, I think it's July 31st. Again, you've got a shot at this head and shoulders pattern forming. Could be putting the finishing touches on the head formation either right here, right now, or at a little bit higher levels. And then we'll be watching. Do we get Reversal starting this week, or do we close strong? Close strong, does it start shortly thereafter with options expiration? But negative divergences are on some indicators, while not on the RSI, present on some indicators. It was higher by 0.25%. The NASDAQ was up pretty much just flat, up about 6 or 7 points or so, getting this doji. I'll be watching. Again, dojis can be reversal or continuation. We're becoming very overbought on the RSI. There is no divergence present. If one eventually forms or not, you have those major divergences in the weekly time frame. Potentially a head and shoulders pattern be in play. Again, here's a potential channel from these lows over here. If we do end up going a little bit higher, this trend line from this high right here is parallel with the lower boundary. Then we have this channel right here to be watching as well. This is a NASDAQ 60-minute chart. Again, we've gone sideways. We're finding support at the momentum line here in the 60-minute time frame. We saw momentum roll over here, but we're going sideways, so you could still turn back up and still end up going up to these levels. I think there's a strong possibility we could see something like that happen, whichever way it unfolds. Watching to see if we start a post-Fed sell-off, as I've talked about. If we pull back on Thursday, do we end up trying to close strong with options expiration or not? Or do we get a reversal before the weekend? So that's what I'll be watching. Do we close strong or do we close weak? The MACD on the 60-minute chart did roll over on NASDAQ. It did not yet on the S&P, but it does have a divergence. So again, we've gone sideways. We'll be watching to see how it unfolds. The RSI went to a new high right here. So there's still the possibility of a divergence immediately or later on after a sell-off. So do keep this trend line in mind right here, parallel to the lower boundary. And whoops, I had my lower boundary wrong. I was connecting it to this low. It's actually these lows back over here that we just saw. And again, a parallel boundary there is directly overhead, as I had on this chart showing you momentum for the NASDAQ. So again, we'll be watching this level up here. We start taking out the momentum clouds and the momentum lines in the 60-minute time frame, then could start seeing some selling pressure. Still think it's possible that we go a little bit higher and find the divergence on the 15-minute chart, S&P. And again, S&P went slightly higher. NASDAQ did not. There's still small divergence between the two with this most recent price action. NASDAQ join it, or will they have a little divergence? Still forming a negative divergence here, still above that upper Bollinger Band. Again, slightly above that is a parallel channel, slightly above where price is right now. Maybe we reach it, maybe we don't. We'll see what happens. Then a possible head and shoulders formation if we start come crashing down going into the July meeting, the FOMC meeting, towards this level here at 17,000. RSI does not have a negative divergence. Other indicators are forming negative divergence. We'll see what happens here. NASDAQ daily chart. The market will be closed for the holiday on Wednesday, but if I have time, I might post something else, so check back. I don't know yet if I will or not. So check back and see if I post something else if you're interested.